Driven by the escalating demand for its high-end data center graphic processing units or GPUs, we have been observing the remarkable surge in NVIDIA's stock price over the past years. The market's fervent embrace of generative AI platforms such as OpenAI's ChatGPT has led to an unprecedented demand for new GPUs, outstripping the available supply. Analysts are now anticipating an 81% surge in the chip market's revenue for fiscal 2025, a clear indication to the company's meteoric rise in the AI realm. With a market cap of $2.2 trillion, NVIDIA has ascended to become the world's third most valuable company, trailing only behind Microsoft and Apple. In light of this development, many growth-oriented investors are now turning their attention to the quest for another company that could be the next NVIDIA. Unsurprisingly, the top contender for this title might just be NVIDIA's rival, Advanced Micro Devices, which competes directly with NVIDIA in the gaming and data center GPU markets. With a market cap of $315 billion, AMD stands as a smaller entity compared to NVIDIA, generating less than one quarter of the latter's annual revenue. In the fourth quarter of 2023, AMD held a modest 90% share of the discrete GPU market, while NVIDIA commanded an 80% share, leaving Intel with the remaining 1% share. AMD's strategy typically revolves around offering more budget-friendly GPUs compared to NVIDIA. However, NVIDIA has also ventured in the lower-end market in recent years to counter AMD's advances. Furthermore, NVIDIA has solidified its position in the data center GPU market, establishing a strong foothold before AMD could make significant inroads. In contrast to NVIDIA's primary focus on GPUs, AMD competes directly against Intel in the x86 CPUs for PCs and servers. AMD has made notable strides in this arena, capturing 35.5% of the market in the first quarter of 2024, while Intel maintained a 63.4% share. Over the past 8 years, AMD has steadily expanded its share of the x86 CPU market by consistently offering more cost-effective, denser, and power-efficient chips compared to Intel. AMD's product portfolio extends beyond GPUs and CPUs. It encompasses custom IPUs for gaming consoles and notebook computers, as well as programmable chips for various markets. On the other hand, NVIDIA's offerings include ARM-based Tegra CPUs for set-top boxes and the Nintendo Switch, along with data center networking products through its Mellanox subsidiary. In terms of revenue diversification, AMD derives 29% of its revenue from the data center market, 27% from the gaming market, 23% from embedded chips, and the remaining 21% from client computing chips. In comparison, NVIDIA's revenue is heavily skewed, with a staggering 78% generated from data center GPUs and the remaining 22% from other chip types. I've noted that AMD's growth has been somewhat slower compared to NVIDIA. This can be attributed to AMD's heavy exposure to the PC market, which experienced a significant slowdown after the pandemic. In 2023, AMD's revenue and adjusted earnings per share or EPS declined by 4% and 24% respectively. In contrast, NVIDIA's revenue and adjusted EPS surged by 126% and 288% respectively in fiscal 2024. Notably, NVIDIA's robust growth was primarily driven by the brisk sales of its data center GPUs, which offset the slower growth of its PC-oriented chips. Despite these challenges, AMD has been making strides in expanding into the data center market with its AI-oriented Instinct GPUs. CEO Lisa Su has expressed that these deployments are accelerating and are on track to become the fastest revenue ramp of any product in the company's history. AMD aims to carve out its own niche in the data center market by offering more cost-effective GPUs, which can be bundled with its EPYC data center CPUs and programmable chips. Notably, major companies such as Microsoft, Meta Platforms, Oracle, Dell, and Hewlett-Packard Enterprise have been installing AMD chips as a cost-efficient alternative to NVIDIA's offerings. Looking ahead, analysts anticipate that AMD's revenues and adjusted EPS will rise by 14% and 37% respectively in 2024 as the PC market stabilizes and its data center business expands. Furthermore, in 2025, they expect its revenue and adjusted EPS to grow by 26% and 51% respectively. While AMD remains a promising player in the semiconductor industry, I believe that there are several factors that prevent AMD from becoming the next NVIDIA in the near future. AMD's broader diversification, slower growth rates, and lower market share contribute to this assessment. Although diversification allows AMD to capture a wider range of opportunities, but that also means that its resources and focus are spread across different product lines. In contrast, NVIDIA's concentrated focus on GPUs has allowed it to establish a strong position in the market. While AMD has been making significant strides, its growth has been comparatively slower than NVIDIA's. In 2023, AMD experienced a decline in revenue and adjusted EPS, while NVIDIA saw substantial growth in both metrics. NVIDIA's robust sales of data center GPUs offset the slower growth of its PC-oriented chips, contributing to its impressive performance. AMD's growth has been affected by its heavy exposure to the PC market, which experienced a slowdown after the pandemic. Furthermore, AMD's lower market share compared to NVIDIA is a significant consideration. In the fourth quarter of 2023, AMD held a 19% share of the discrete GPU market, while NVIDIA commanded an 80% share. This substantial difference in the market share indicates that NVIDIA has a more dominant position in the GPU market, which is a crucial factor for AMD to become the next NVIDIA.